Hello guys, glad to have you on board again today. Preparing ahead of tomorrow's recording for the third range boundary. Today I thought about releasing just a little bit of practicing or examples, call them however you want. So in these videos, I'm going to show you some advanced patterns. Of course, we're going to make courses about them, further YouTube channels with more appropriate context, video recording and stuff like that. But in these, it's just like basically showing you how in real-time markets I can apply some of those patterns so you can either learn from them and we're going to solidify this knowledge later on, but more importantly, showing you how this thing works and how the bigger picture of what you're learning is all about. Because actually sometimes those of you who are beginning with the strategy and mostly still learning the third range boundary and how to properly plot them in the chart can somehow feel like, oh geez, that gets really boring, and that isn't rewarding at all. So I wanted to give you one of the many examples of patterns that I'll teach you later on that highlights how important the third range boundary is. But just way more than just trading them. It's more important that you actually, guys, manage to plot them correctly. Because if you do, this is going to be absolutely massive in terms of information processing later on when we're going to do trend follow and basically, more importantly, trend maturity. How strong the trend is, can we still follow it, yes or no, and all of those things massively comes out of how prices react to third range boundary on multiple time frames. So anyway, plotting them is absolutely essential. Being able to plot them on multiple time frame is key to success in trend following. But before going any further, I'd like to say that more obviously, you need to learn how to build those third range boundary, how to plot them, what's the psychology of this thing. But later on, as you get to progress, I'll teach you one by one all of those patterns I've built around this third range boundary. Today is going to be one of those examples of patterns derivated from third range boundary. So I'm not going to go into the details on how you get to build the third range boundary. I'll just go real fast in here, assuming that you've already seen the third range boundary video, which you probably didn't if you're looking at this one in real time, but I'll release the video by tomorrow, okay? And anyway, you should be knowing by now how the third range boundary is built. So anyway, it all starts with a trending behavior. You need to break major resistances, see some breakouts, at least trending behavior anyway. Either you saw it real time when the market broke, or later on as the trend gets to mature, as you see context boxes unfolding and stuff like that. So in here, the market is oscillating higher, okay, moving averages are bullish. All of those things suggest that whether you like it or not, there is a trend going on, which means either you want to follow that trend or you're going to assess the strength and maturity of this one, and in that perspective you're going to have a look at the third range boundary. Okay, it's really that simple. So first and foremost, as there is a bullish trend, there is a forthcoming third range boundary. It's just a matter of time, and you just have to be patient enough to find it. So let's play that gamble in here and say, all right, bullish trend, the pattern comes from these bullish trends, needs to reverse them, reverse the context, and pull back into the resistant context. Pure and simple pattern. Needs to retrace at least 61% if you have shown some strength in there. Otherwise, that's an average neutral range with 76% retracement required. Okay, so pure and simple. In here, do we have 61? Yes. Do we have shown some bearishness? Yes. So we can trade this one as a bearish range. So here's your first third range boundary. Okay, so let's put a plotting signal in there so you actually get to understand what this thing is all about. So that is the first bearish third range boundary. What we care about is not necessarily how do we trade it. That depends on risk managing, even though in here you probably would have traded this one with the taking profit pattern. Means you definitely don't go in with a very big position, but mostly just a tiny position, mostly if you are bullish in this market, to cover the portfolio, because it's probably going to limit the potential to the upside and therefore limiting your gains. So you really want to cover up the portfolio in there, but it's probably just going to be no more than that. All right, so in that perspective, you cover the portfolio or take some, hedge trade or whatever, or just a classical against the trend third range boundary. You just sell a bit, but you don't want to be too greedy on this one. Okay, All right, remember that how those trades behave. Take the risk management stuff into the PDF manual. As you get to make a candle close into the lower 50%, you get to validate, which means you must be stop at break even and be 100% sure not to lose money if the market retraces to your entry price or goes higher. So at that point, you're safe. You're in safe area, pure and simple. So there's no loss. It's just you took your third range boundary, you validated it, but you still need to get to the opposite context. So in here, we can see that after validating, the third range boundary gets you out of the game. So that means the bears are not really that strong. It's pure and simply. And how do you know that? You could say, yeah, I feel like the bears are not really strong, whatever. No, actually make it reliable. Make it 100% technically based. In here, you can say that the bears had an opportunity in here, they validated, and they got pulled out. So as the bears are out, means the bulls are strong. It's simple as that. Means probably the trend keeps going. All right? It means that in here, you can keep going on. You can keep trend following this thing. Okay? You're generally going to build the range structure that preceded in here. All right? This was a triangle. The third range boundary, you're going to take a specific level out of this one. I'm going to show it to you right now. Okay, you're going to note every level of the third range boundary later on when you want to do trend following or trend strength assessment. And you're going to take the context box that caused the reverse. Okay, and you're going to take the open of the next box. So exactly in here, when the boxes are switching, this is the price you want. Take this price, put it into the historical charts, and we're going to use this one later on as a trend assessing, as a trend strength assessing. Okay, so as the market is breaking this level, you should definitely put yourself in alert. All right, you're breaking the third range boundary risk management level. You've had a mature range on the lower time frame. Okay, so markets have been accumulating in here, oscillating from context to trend channel without reaching the opposite context. Okay, so definitely in here, bulls are getting strength over the bears, and the bears didn't manage to get to their profit taking area. Okay, so they got stopped out after validation. And in here, what do? We take off the bears. So we definitely want to follow this breakout. We're breaking our triangle and the third range boundary risk limitation level. So this is definitely where you want to follow the trend. You get back in and you try to reach out for a 1-to-1 ratio. You've gone that low, so you want to go that high. This is where you profit take. This is just a simple breakout trade. This one comes entirely of the third range boundary management, and you couldn't have taken that trade any other way. So do this one well, even if you don't trade, even if you don't take that trade. Assessing how prices behaved with that level is key for you to get some trend follow trades. You don't want to go against the trend. You don't want to trade ranges. Well, this is how you can properly trend follow. In here, you know that the market has just made a pullback. It is definitely not the end of this trend. There's still a little bit to come. Okay, there is also another trade I can teach you out of this. When the market managed to break and valid the breakout, reaching out the target of this breakout, the 1-to-1 risk reward ratio, okay, when the market pulls back to this third range boundary management level, you might want to buy any bullish signals out there. So it also gives you this trade. All of this comes from the well placement of this third range boundary. Do it not well, it's not going to work. Do it well, it will, and it can provide quite a lot of trend following trades. Aside from those, I'll teach you how to catch the pullback, how to catch those things. These are additional trades that derivates from the third range boundary management. Okay? So in here, you would know that the market is still bullish. Let's just follow it, pure and simply. Okay? So you follow it. Of course, you know that after the pullback comes the final excess, so you definitely want to lock on your gains out there, depending on the type of signals you get. This is just overbought out here, so you would probably just take a 25% profit off the table, up to 33% at best, but probably no more than that. It's not an exit. It's not a mandatory get out of the game, but just save on your gains. Market could retrace. Markets are actually retracing out there. And what we care about is, do they reverse the context? It's that simple. Yes, they do. Context is reversed, which means any fucking time a retrace back to the resistant context is going to be another third range boundary opportunity. So, is this one a third range boundary trade? Okay. So you might be saying, yes, of course, we reversed, we retraced, that's fine. Fuck no. What about the Fibonacci retracement? Okay, minimum 61% retracement is required out there, and you're definitely not doing them. So in here, you're barely 50%, definitely not enough. So prices may require to go higher, at least to 61. So here's where your third range boundary starts. Okay? Therefore, this one has broken the resistance context, traded above it several times, so this is 76% required. This is where your first tradable signal is, okay? You know what the thing is, you know the patterns, you know that when the market is on a neutral range perspective, your profit-taking area is the opposite context. So clap, clap, this time the bears have managed to go right up to their target, or right down to their target. So in here, how did the third range boundary trade go? Pretty well, as the bears got their profit-taking area reached out to. So this time the trade failed, the bears got taken off the table. This time they didn't. So are you going to buy the breakout of this range? No shit, Sherlock, you're not. But you could eventually buy the fourth range boundary in here. This is definitely the fourth range, okay? First range boundary, second, third, and fourth. So upon trend following rules, those I'll teach you in a separate video, you probably would have bought this signal. So you don't buy the breakout in here because that doesn't fit the pattern, but you're definitely going to buy this trade. This one is risky, of course, but you definitely will take it. Okay? It has no signals actually, so you would just be trading with this breakout trade, which is not necessarily the fanciest type of risk management. So this, if you take this trade, would definitely be a tiny position sizing. It will still work just fine, and you would target, once again, market making new highs and profit taking the shit on top of the resistance context. This is where you profit take. This time it's a taking profit pattern, so 50% off the game. You take another 50% of all your incoming trades to the upside, okay? You're fairly limiting your gains. And what comes next? Another market top, comes another third range boundary down the road. You're still following the previous trend, still lacking of strength, but still trending as you're making higher high points. So you know another third range boundary is down the corner, and here comes another pattern I'll teach you. Because as you can see, we've already reversed the context in here, and we've managed to break the previous low point. It hasn't been lasting very long, but still happened. That's the first element of another pattern. If you break the previous low point, after making a slightly higher high point, after validating a third range boundary, comes a very probable pattern, which is actually in here our third range boundary got slightly higher. Let's note the price in which we closed the context. It's this one. So here's our open price, okay? And we must study how it reacted. Out of this third range boundary, the market reached out its profit-taking area. We've oscillated quite a lot around the third range boundary price, and we've managed to overcome the resistance, but failed and heavily retraced, broke a support, and now we're back in ranges. So if there is an emerging third range boundary out there, and as you can see, market have already reversed the context, so there is quite a likely possibility for this to show up probably tomorrow. This is a daily context box. So tomorrow you will get a lower context, and if markets are trading near this one and displaying some bearish signals, we'll get another pattern. This pattern is a very complex one, requires breaking the previous support, require a final excessive market in here, okay, so a very probable market top. We never know for sure, but it has to be one that fits the plan. It definitely does. And when you have all those elements reunited, you need to have a validated third range boundary proceeding out there to make it viable. And what comes next? If the market fails once again into this area, it doesn't have to be very precise, okay? So the level is 1362, okay? Take it as an average price. I would say anything that reverses below 13.2K in here, anything in this area, okay, would be considered building another third range boundary into the approximate area of the previous one. If the market does that, oh shit, that is a huge reversal pattern. That means the market will have several chances to break the pattern to the downside and terminate the overall structure. And generally that reverses the trend on the higher time frame. So the 4-hour trend, if there is one, is probably going to terminate out there, which means we're going to retrace the 4-hour trend. Okay? If the market reverses out there, so you definitely want to have a look at the German DAX within the next 48 hours, because if it does trigger a reverse out there, it is not going to be pretty. The pattern, though, doesn't mean you short sell and leverage position and stuff like that. This is just going to be a third range boundary trade. But you know this one is going to be, is going to need another type of risk management. This one you're going to be a lot more aggressive, of course, if you know this pattern, but you're going to know that this one you're definitely not going to 50% profit take or whatever. You're going to keep the entire fucking trade open if the market reacts out there, okay? And you're just going to sit tight because this pattern actually doesn't validate until you get to the previous low point. So you get out there, you do nothing, of course. Don't profit take this trade, just let it fully on the party. But when the market breaks the previous low point, you reinforce the position. This is where you double the size of the current position and you lower the stop loss at this level or around. And you know that the market will never retrace up there. Never, never. That's the pattern we've known with the BTC at 10.8K. And I very well can tell you that we're not going to get there again, at least not anytime soon, not until we at least range on the higher time frame, which means right now, if the German DAX is validating a reverse out there, it's probably going to go for a 4-hour fucking range. So it's going to be long-term range for German DAX if this pattern terminates. Can we know about it? We don't know yet because the signal's not yet there. We need to get closer to the context and it's probably going to happen tomorrow. So bear that in mind. German DAX is trading into a very dangerous area and better has not to reverse out there. Otherwise, it's going to trigger a very bearish pattern. Just a pattern that says we've been ranging quite a lot, we've failed to break to new highs, and anytime the market got on top of 13.06 means anytime we've got out there, no one's buying. No buyers means we're going to have to find them at lower valuations. Okay? And that pattern simply means that the market is overextended, not finding buyers, it's exhausting itself, okay? That's generally the signs of a major bullish trend being on, as we're spending quite some time into this area. Remember, all I'm saying in here is what I told you very fastly about Bitcoin this weekend. Okay, this pattern is a sign of health. That means that even if we're lacking of buyers, we're spending a shit ton of time working out this range area, which is a very positive stuff for the future of stock indices. So this is not an end of the world reversal type of pattern bear market and the end of markets and whatever. Definitely not about it. This is really a sign of bullish trends really being solid. But that means they're overextended and we're going to have to retrace and range a little while. Okay? So that means you can risk manage with putting safe stop loss on top of this level and just risk manage your way down. And as we reached out to the target, we'll definitely get to buy, but that will require a mature 4-hour range to come. So a lot of time to wait in which the market will have absolutely no chance to get on top of this level. So either it will reverse the trend and cause a bearish trend, but very less likely going to happen. As I said, this pattern is a sign of strength on higher time frames, but it's going to cause quite some range and quite some retracement. Okay? So in this pattern, what happens is that you're going to zoom out to your 4-hour chart. If this one triggers, of course, so far, it's definitely not granted, but if it triggers, like triggering the third range boundary and breaking the supports, your targets will be the Fibonacci levels. First mandatory retracement for a trend follow, 23%. And like we said, this is not a trend follow opportunity, so we're definitely not going to target 23. I would say we're probably going to get to target 38% retracement. So this is where you're going to be targeting this trade. 11.4. Just look at how it goes, okay? With a speculative entry out there and a breakout trade out there, just look how big the risk management is. You've got a 1 to 4 or even 5 risk-reward ratio out there. This is definitely far more rewarding than the range trades you've just been taught, which is definitely a 1 to 1.5 risk reward ratio. So in here we're talking about 1 to 5, but of course that requires absolutely good lecture of the market. But those patterns, they definitely are rewarding, okay? Because you're going to get two positions. One of them is a 1 to 5 risk reward ratio, and the second is even better than that, okay? So just bear this one in mind. Have a look at the German DAX. It's still very speculative at that point because first of all, the trade isn't even triggered. And secondly, this is speculative. So this is not where you go all in and saying, oh man, I've got the pattern, it's going to crash. Remember that pattern activates out there. So there's two ways to approach that. Either you take the speculative trade or you just wait for the breakout trade. I think both ways can work. This one is obviously far less risky than getting into the speculative trade, but getting into the speculative trade will seriously help maximizing the profits. It's always how things goes. They balance each other. If you want to take that risk, of course you're going to get some nice rewards. But this is of course where the trade gets at risk. But if the pattern validates and if we retrace down the support, breaking down the support has a very, very high level of confirmation. Okay? So it's basically what happened in Bitcoin recently, happening exactly the same way into stock indices just a few days after. So yeah, I mean, this is the best way I could do this because we know it has happened into cryptocurrencies. We're still having this one pending into stock indices and specifically the German DAX right now. So we'll see what happens, but at least this one has been recorded in real time, which make it a lot more reliable for educational purposes. Okay? That being said, wish you guys later, but I hope you do understand how important the third range boundary is.